Hello and welcome. You're watching KYC, Know Your Company. We're going to today speak about Vaibhav Global. We'll try and break the company down, try and see how it's performed maybe over the last 3 to 4 years. And first off, we'll start off by understanding what it does. Very unique business in that sense. What it essentially does is it manufactures jewelry. It started at least with that. It started with jewelry. Now it has diversified even into lifestyle products. Lifestyle products meaning your regular home care products from bed sheets to towels. But let me first start off with the key starting point, which is jewelry. They actually had they're more like an e-tailer of jewelry, right? And a lot of it being artificial. They target the value conscious customer in the West. So whether it's US, whether it's now Europe, UK, largely US and UK is where they have a significant presence. They're now diversifying into Europe. What they do is they push ads through TV channels, and like your typical Naptol model in India, they try and sell their products in US and the UK to the value conscious buyer. And there aren't just a few. There are 7 lakh unique customers that they have in some of these geographies, US and UK in particular. Now they are growing in Europe as well and growing their presence fast in Europe. They've re-entered the Germany market in 2021. That's why you'll see some numbers starting to get impacted from 2022, 2023, and now even in first half of 2020, rather FY24, but even in first half of FY25, we've seen a bit of an impact on the numbers. Q3 is when we've started to see an unwind. It's an omni-channel e-tailer of fashion jewelry, accessories and lifestyle products. Omni-channel meaning that they not only deal with online shopping, but also offline. They sell their products through a single channel, which is manufactured by them. So it's a fully integrated supply chain, all within Vaibhav Global. Even brands are within Vaibhav Global. So it's vertically integrated, and fashion jewelry and lifestyle products is largely what they focus on. Fashion jewelry, which was 70% a couple of years back, currently sits at 66%. Lifestyle products, the mix is increasing. It's an end-to-end B2C model. So from raw materials to manufacturing to selling and including marketing and customer service, all is dealt with within the company itself. There are proprietary TV channels and digital platforms that they sell through. All of the products that they sell are sold through single source, manufactured by them. So that's one of the big positives. 7 manufacturing units is what they have across India as well as China. And largely, the factory at Jaipur is large, 169,000 square feet is what the factory size is. In terms of capacity, 5 million pieces per annum is what they can manufacture. In terms of SKUs, they have a very solid number in terms of unique products that they are able to sell. They have around 25,000 SKUs, including 5,000 unique SKUs in the lifestyle category. And they generate around 28,500 plus new product ideas annually. And there are over nearly 5,000 ideators and 14 to 15,000 new jewelry designs that are brought out on an annual basis. So those are some of the growth levers which will likely play out. They have 31 in-house brands. The largest ones are these. Those are just some of them. Of course, they don't cater to the Indian market. Therefore, you and me don't hear these brands on a daily basis. Very niche, value conscious customer in the West is what they deal with. But we're going to speak with the management later on this show. We are going to be speaking with Nitin Panwad, who's the group CFO of Vaibhav Global. But more importantly, how do we analyze this one? So what are the metrics we look at? We'll look at it typically like a retailer. We'll start off with income statement, balance sheet and cash flow. We'll try and zoom in on how those have played out. We'll look at return ratios as well, long term as well as short term. And we look at shareholding, street cred, Valuation and street coverage we'll combine because street coverage is limited, and then we'll speak about what the outlook and the guidance is at the end of Q3, and we'll go and we'll speak with the CFO of the company as well. Joining me today, Mahima Vajrajani, to talk to us about exactly this, try and break this one down and help me do that. So thanks, Mahima, for joining. Start off with the income statement.
Right. So, I'll start off with the 4 numbers that we always concentrate on. That is your revenue, EBITDA, margins, as well as your profit numbers. In terms of revenue, there has been a 3-year CAGR of 11%. But as we were discussing earlier as well, it has been a steady 11% CAGR for the counter. For EBITDA and net profit, the 3-year CAGR is negative. For EBITDA, it is around -10% and net profit is around -22%. But this is because they have been expanding in European markets as well as overall focusing on Germany as well, which is why there has been a slight degrowth where EBITDA as well as net profit is concerned. Margins have improved as compared to FY24, where it stood at 9.7, which has improved to 11.5 in 9 months FY25. So overall, an improving trend in terms of revenue. But EBITDA and net profit, slight degrowth because of expansion plans, which is why overall we've given a neutral rating right now, because management has also guided that FY26 is when overall impact of Germany's expansion will have on bottom line. That's when Germany turns positive and will have an overall impact on the net profit numbers as well. In terms of how revenue is divided for Vaibhav Global, where in terms of revenues by format, right now 60% revenue comes from TV and 40% comes from digital. They are focusing on digital and want to expand overall their digital presence. Revenue by product, well, 66% comes from jewellery and 34% comes from lifestyle. In terms of geography, US contributes 59%, UK contributes 29%, and Europe contributes around 12% right now. Now, in terms of how overall divisional performance has panned out in terms of TV division, TV revenue stood at 1,444 in 9 months FY25, which is improved as compared to 9 months FY24. Sales volume has also improved. In terms of average selling price, that has gone down by a tad bit, which stood at around $39.1 versus that of $38.3 in 9 months FY25. For digital, revenues again have improved here from 840 to 964 crores. Sales volumes have also improved and average selling price has also improved where digital presence is concerned. It stood around $30.2 versus that of $31.6 in 9 months FY25. Lastly, B2B division, the revenue stood at 122 crores in 9 months FY25, which has improved from 96 crores in 9 months FY24. So overall, even in terms of divisional sales, there has been an improving trend. Because there is a slight degrowth in EBITDA and net profit, we've given it a neutral right now, taking a conservative approach. And this is the overall view as to how income statement pans out for Vaibhav Global.
Yeah, absolutely. So, Mahima, thank you for that. It's a fairly detailed breakdown. Couple of things that I want to add to this. The company does nearly 60+% in gross margins. For a retailer to be able to do that,
True.
It's commendable. So that's the first piece. A lot of the expenses are on the marketing side, right. And because they've opened Europe, therefore margins are slightly stretched, if right. I can call it, over the last couple of years. How those margins unwind is going to hold the key. That's the EBITDA margin. The gross margin doing fairly well. But let's quickly go across to the balance sheet, and I'm not going to take too much time here. Looking at net worth, FY24 versus 25, you've seen an expansion in H1. Debt, they're a zero debt company. That's the one big positive that you're seeing. There's very limited risk that a company has when debt is zero. Lease liabilities, okay, there are some, but cash balances are more than enough to offset lease liabilities. And what we've noticed is company regularly maintains a decent amount of cash on its books, which is always healthy. So Therefore, a clear thumbs up. Cash flow, Mahima.
Right. So cash flow, the net cash, overall cash flow from operations has declined a tad bit in first half of FY25. But overall, we'll have to wait and watch out for as to how FY25 overall pans out, because they might have put in some money in acquisitions or in expansions in European as well as US markets. And overall, you know, as you rightly mentioned, they're putting in money for advertisements as well as marketing spends are going up. So that might also have an impact on overall net cash flow position. But in terms of the net cash flow position overall has improved as compared to FY24 as well as first half of FY24, because that was a negative number which has turned positive to 8 crores in first half of FY25, which is why overall we've given it a neutral rating for now.
Perfect. Let's talk about return ratios. Again, a neutral on this count, because what we've seen is return ratios were elevated for the better part of pre-2023. Thereafter, we've seen return ratios fall. It's because of their European expansion to a certain extent. It's because of acquisitions also to a certain extent. Now, you would hope that as margins start to recover, return ratios also start to normalize. So we'll have to wait and watch for this metric. But otherwise, historically, it's been a high ROCE business and high ROE business, as you can see. There's been a bit of a dent, but you could well see this bounce back. And if it were to go to 31 or even 20 plus levels on the ROE count, you could well turn this into a thumbs up very, very quickly. So it's a wait and watch, a neutral for that reason.
Absolutely. The next parameter that we're tracking is shareholding, where in terms of how shareholding has panned out as compared to how it was in March 2022 versus how it is right now as of December 2024. Promoters have slightly diluted their stake from 58% to 57%. FIs have increased their stake from 10% to 18%. DIs, however, have decreased their stake significantly. They're now holding only 0.7% versus that of 18.5% which they were holding in March 22. And public shareholding has significantly gone up from 12.6% to almost 23.5%. But it's also important to mention here that there are some marquee investors who have invested in this particular company, that is Vaibhav Global. There's Nalanda India Fund, which is holding around 7.6% stake in the counter. There's Malabar India Fund, which is holding around 5.7% stake. And Vijay Kedia is also holding 2% stake in the counter. We have given this a neutral rating only because DI holding has overall gone down quite significantly, and we've taken a conservative approach here, but we've seen good marquee investors that have already invested in the company. That shows their confidence in the company as well.
I want to quickly mark out one piece here. The DI number of 18.5% was in March of 2022, included a 10% stake of Nalanda. Now, Nalanda has converted itself into an FII, and therefore that 10% stake has actually come here. It's gone down a little bit. Nalanda has sold off around 2 to 2.5% stake, and therefore that 2.5% delta versus March of 2022, but that's the one big addition. So that's one. Second, on the shareholding side, I see very, very interesting dynamics. One is you have a Vijay Kedia, which you correctly said. There's also an Ashish Kacholia, which owns 1.2% of the company. And of course, public shareholding has definitely gone up as a result of some of these marquee investors coming in and buying a stake. So that's how it's playing out. It's neutral only on the count that you're seeing outside of this 10% ownership of Nalanda, 8.5% has been sold by DIIs. Largely Motilal Oswal Mutual Fund to some extent has sold out. And therefore, maybe a bit of a neutral, maybe some overhang there. And you're also seeing Nalanda slowly sell. And that's why the neutral on the counter, on this metric that we're giving. But otherwise, it's very interesting, the shareholding on this one, Mahima. Let me though go ahead with regard to street cred. Well, not doing well from a street cred perspective, very frankly. The 6-month chart, stock is down 25%. When you're looking at the 1-year chart, it's down 38% in the last year. And the 5 years, it's down, it's up 58% only. So 5-year returns not too impressive. The question only is, is all the negatives really built in? But the way we are looking at the way street cred has played out, it's definitely a thumbs down. Valuations.
Right. So in terms of valuations, there's no direct peer for Vaibhav Global. So
Correct.
we don't have a peer-to-peer comparison here. But if you see the Bloomberg PE estimates for Vaibhav Global itself, the trailing 12-month PE stands at 29 times, which is not cheap for a retailer. Going forward also, the slide in PE comes to around 22 times in 2025 and comes to 14 times in 2026. 14 times, the slide from 29 times to 14 times is quite steep. But right now, the valuation is not looking cheap, which is why we've given it a neutral rating. And overall, in terms of analyst recommendations as well, there are not a lot of analysts tracking this counter. It's just one analyst which is actually tracking it and has given a buy rating. And the return potential, as per Bloomberg, is 189%. But since it's just one analyst tracking it, we've given it a neutral rating, taking a conservative approach again here. So that's with respect to valuations and analyst recommendation. But what's the outlook like?
Why do you cover outlook?
All right. So in terms of outlook, we went to the con call and we saw that the management has given a revenue guidance of around 12% This revenue guidance, however, has been cut down from 14 to 17% to around 12% And this is because of performance in US and UK, and the consumer environment is right now muted there. Early teens revenue growth in FY26, and they remain cautious with respect to the macroeconomic trends, confident in sustaining profitable growth, and lastly, they plan to enhance profitability through supply chain as well as adding new subscription box launches. So this is the overall outlook so far that the management has given for the company, Harsh.
Yeah, outlook definitely looking positive. But you know what? I'm not going to waste any more time. Very quickly on to a summary of the metrics. It gives us a 4.5 on 8 with regard to parameters, income statement, balance sheet, cash flow, return ratios, and thereafter we look at shareholding, street cred, valuation, street coverage, and outlook. That's broadly the way in which it's played out. 4.5 on 8 is our rating. Let's go across to the management. We spoke with them earlier today. Mahima was able to speak with the group CFO, Nitin Panwad. Listen in to what he had to say.
On the tariff terms, like global landscape is fluid at the moment with the multiple trade wars and the political changes happening. The tariff is now new thing which Trump administration has announced, and on the 2nd of April that he may impose some tariff on the multiple countries. But the multiple research report available in JP Morgan and other research reporters said that the maximum impact would be on Mexico, Canada, and China. However, India would be untouched upon it. But the vertical integrated supply chain model we not only operate in India, but also we have a sourcing in 30 different countries across the world, which establish us in a much better position to diverse our risk to mitigate all the tariff if they implement from 2nd of April. However, there will be definitely impact. We cannot say that it will not be impacted, but we operate with the lower cost of goods sold compared to other retailer, which will be compared to them, the duty impact on us, which will be lower than that. And it will not only for us, the duty impact will be across all the retailers. So comparing them, we have a two advantage of diversify our risk to the multiple sourcing countries we have, and also that we have a lower cost of goods sold. So comparatively, we have a lower impact on tariff.
Got it. Lower impact of tariff on Vaibhav Global is the takeaway from that particular question. Now, in terms of lab-grown diamonds, there has been a surge of demand where lab-grown diamonds is concerned, especially in the US and the UK. And as of the last quarter, we saw that around 9% of your overall revenues is now from lab-grown diamonds. I just want to understand as to what are the key trends that you're observing where lab-grown diamond sales are concerned, and what's the outlook like? Where will this 9% number go to? And overall, how will that impact your margins as well as top line?
Sure. Yeah, so in past 9 months to 12 months, the lab-grown demand is increasing quite a lot. And we have seen that customer is asking more for lab-grown, it is more affordable than the natural diamond. The pricing is 1/10 or even lower than the natural diamond, and we see continued good response. The two advantages that we have for the lab grown, one is the customer demand and velocity is quite high. when we sell the product on air on the social media. And also that we have a higher gross margins on the lab-grown product, as we have sourcing in multiple countries the lab-grown product. And also that we have seen over the time period, we have a lower sales return also for the lab-grown products. So we continue to see that product share is increased from 3% in Q1 to 9% in Q3, and we expected that it will hit the double-digit share in near term in lab-grown products. So it will continue to expand the near term the lab-grown product, as we have seen the customer acceptance and velocity is quite high, and we believe that the share of the lab-grown product will reach to double-digit near term.
Okay, and with respect to your Germany business, overall in Q3 there was a robust 30%, over 30% revenue growth, and you also in your con call said that you are expecting positive momentum in Q4 as well. In terms of contributing towards the bottom line, do you expect Germany will start contributing towards the bottom line in FY26?
Yeah, so if FY25 Q3, we have breakthrough with Germany, and now it will start contributing in terms of more profitability in upcoming quarters. Germany not only contribute in terms of the operating margin, but also contributed in the lower tax rate, as the carry forward losses is pretty high in Germany. So once the profit will generate, so the effective tax rate will also reduce for the company and continue to be expecting, even with the recessionary environment in Germany, we are continuously growing in the past quarter 30% growth, and we expect that will continue to grow and generate more market share and more market margins from Germany operation.
Got it. And in terms of your US and UK business, because you know, when I went through your con calls, I saw that Q2 you had given a guidance, revenue guidance of a growth of around 14 to 17%, which you actually lowered to 12% in Q3, and this was because of muted consumer sentiment in the US and UK. I just want to understand as to how things are looking like now in US and UK, and in terms of demand where consumer sentiment is concerned, and going forward, do you expect that to improve in FY26?
Yeah, so consumer demand is still muted, and especially with this tariff and the multiple trade war situation, the customer is still cautious of the discretionary spending. However, customer is spending on the investment item. We see the values kind of like a gold or the other high-end items where they perceive some value, but the discretionary demand is muted. And our value proposition, our model is value proposition. We offer quite a lot of the discretionary products, but the ability and agility we have to move the products where the demand lies. So we moved in past years our product more on the gold items and more on the higher price point items where they perceive some value, but we still see the economy in US and UK, both are muted, especially in Europe and UK. We are seeing the impact of the cost of living crisis over there. So that is why we have trimmed our guidance for the upcoming quarters.
Okay, so out of time on this edition of KYC with that conversation. We hope you found this insightful and helpful. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.